particular, we'll examine what executives told us about their priorities for the coming 12 to 24 months as well. Throughout the webinar, we'll review survey data from past webinars and share insight from a wide range of industry experts that include analysts, association leaders, as well as insurance executives. So to start the session, let's take a look at the stories that dominated the year and are becoming increasingly important going forward: customer experience and data. In the past year, we presented over 14 Equisoft Accelerate webinars, featuring over 40 speakers, 20 industry partners, and hundreds of insurance executive attendees. As we talked to industry experts and surveyed participants, we quickly began to understand that customer experience was a top-of-mind concern for all carriers, as illustrated in these two sets of audience responses. We saw similar results across North America, EMEA, APAC, Caribbean, and LATAM. The importance of the customer experience is not a regional issue. It concerns insurers around the world. Kartik Sakthivel, CIO of Limra Loma, summed it up this way.
While it's tempting for all of us to think about the here and now, to think about digital and digitization with our existing customers or the prospects that we have, let's think about the generational shift that our industry is experiencing, right? And I've said this in multiple forums, and I'll keep saying it, but what is our industrial playbook for reaching out to Gen Z, right? So this group is between 8 and 18 years old today. In 10 years, by virtue of simple math, they're going to be between 18 and 28 years old, right? So that's going to be our next buying population. How are we tailoring our insurance products and services from an experience and engagement point of view for this cohort? The need for faster issuance of insurance policies, the automated accelerated underwriting programs are fundamentally, important for this generation. So I can tell you, this generation that's so used to, and even our generation, right, shopping for automobile policies on pretty much an annual basis, using your mobile phone to get quotes to bind and to underwrite a policy. We can't wait for this generation to wait a week or 2 weeks before they hear about the life insurance policy itself, right? Or get a quote. And the other thing, and I said this during our dry run, is think about this generation, right? Generation Z. So we've got the life insurance contract. When is the last time anybody's actually read through the life insurance contract? When is the last time anybody's read through an iTunes contract? What do? You scroll, you click accept, and then you move on with your life, right? So how do we change our entire product offering from a customer, client engagement and experience point of view with something as basic and fundamental as the life insurance contract to reach out to a generation of consumers that actually invented something that says PL semicolon DR, too long didn't read, right? We're trying to get a generation of people on TikTok to read Moby Dick. So we need to augment and update our offerings as we go forward.
Dan McCoach, head of insurance at Celent, shared an important distinction between the customer experience and customer engagement.
I think you'll see the terms in a lot of literature, maybe interchangeably, hopefully not too much interchangeably. I think there is a difference. Most of us who study and think about this deeply know there is a difference. The typical approach for customer experience involves the user interface. Of course, that happens increasingly online and digitally today. And so the design, ergonomics, user friendliness, straight through capabilities, real-time capabilities, typically are applied to digital interactive capabilities. And that's usually what's considered, broadly speaking, customer experience or good customer experience design. I would say, however, it's not limited to the digital realm, and it's important to consider the customer's experience in those terms with respect to call center and really all interaction points with the insurance organization. Engagement, however, we have to draw the lens back farther. Engagement is a little more difficult to define. I would say that one has an engaging platform or an engaging brand if, as a customer, there's something very compelling about the experience. There's something, that almost adds so much value that you make it a part of your daily routine. And I think the best way to describe an engaging platform is to use perhaps a non-insurance example. We've probably all seen the advertisements. Maybe many of us even own a Peloton bicycle, stationary bicycle. And so what is it about Peloton that's so compelling? It's the online community that's so engaging with the support, and you feel as though you're in the gym and part of the group. That's, I think, an example of a truly engaging experience that's somewhat separate from the product. After all, a stationary bicycle is a fairly common piece of exercise equipment, but it's the integration of the digital experience that makes it so compelling and so engaging. So I hope that explanation helps draw a differentiation here.
With that differentiation in mind, we asked insurance executives about the challenges they are facing when trying to create a great customer experience. The results were interesting. 56% of respondents cited legacy technology systems as their #1 client engagement challenge. That certainly dovetails with another trend we saw continuing in 2021, which was the accelerated modernization and digitalization of technology to overcome challenges presented by the pandemic. Carriers have been moving forward their plans to modernize their policy administration system and have been upgrading their front-end sales solutions like e-apps, quoting and illustration tools, and advisor and client portals. Given the current situation, the next question is, what are carriers planning to do next when it comes to the customer experience? Sanjay Kaniar, partner at McKinsey & Company, shares his insights.
The heritage or platform digital transformation approach, right? It helps the carrier connect with the existing policy base, existing books of business, right? Which is, obviously life insurance stays on the books once you get a policy holder, the policy holder stays on the books for quite a while, right? So for a majority of the carriers, finding ways to engage with the existing set of policy holders is going to be an important value driver. It's going to help with cross-sell, upsell, retention, all the other good things that comes with it. Those customers will very likely be on the existing policy admin systems, right? I mean, carriers would have somewhere between 2 to 50 based on how many years they've been in the business, how many acquisitions they've done, and so on. So finding a way to engage with those policy holders is going to be important. Two sort of main ways in which policyholder carriers have gone about it. One is they would say, look, let's put a digital overlay on top of our existing technology landscape. Put some human middleware where technology doesn't quite bridge the gap, and this is reasonably quick, reasonably low risk. You can show value fairly quickly, and it's going to move the needle somewhat. So that's sort of the 1A approach within how you do this within the existing platform. The second 1B, I would say, is you take it a little step further, where you take your admin systems, you piece it into different modules, and selectively modernize some of the modules that you think are more critical for customer engagement. So those are how you take an existing technology landscape and make it ready for digital engagement. That's on the one side. Obviously, the main advantage of this is you can reach your existing customer base. You can improve the transactions. I mean, billing, for example, right? You send a bill every month. You send a policy statement every 6 months or 12 months. These are all opportunities and trigger points to engage. So with the existing base, you can use the current systems, modernizing them and building some digital capabilities into them. You can engage. Then the greenfield obviously has a has a distinct advantage that you can make it very efficient. You can build state-of-the-art interaction model, engagement model, leverage all sorts of external data, internal data, AI, ML, etc., and make it very rich and compelling. That has the advantage, but I think the main issue is going to be how much of my premium base it's going to touch, right? How much of my customer base it's going to touch. So that's always going to be the question for Greenfield. And then also, at some point of time, you have to build for the future also. You cannot only be improving the existing base. So I think based on where the carrier is in this journey, based on their strategy, based on their go-to-market and product roadmap, etc., greenfields, green shoots happen quite frequently. But it depends on the situation the carrier is in. Just reflecting on this, right? I mean, engagement is obviously important, but digital, while it's predominant, a predominant way, particularly these days in engaging with customers, may not be the only way, right? It may not be 100% digital.
With that in mind, we asked leaders what is their primary technology focus in regards to customer engagement. Although agent and client service portals were the most popular choice, the results were close, reflecting the fact that each carrier's situation is unique and, depending on the age and effectiveness of the different types of the solutions already in place, they may choose to invest in foundational back-office modernization or quick-win digital sales and service tools. When it comes to implementing those technology solutions, there are a couple of approaches that insurers should consider. Equisoft's own Director of Wealth and Insurance Solutions for EMEA, Shingi Maramba, has this to say.
From our experience, we've seen two options that some insurers are doing, and these two options are doing all of them. And from this, I'm talking on modernizing technology in support of better client engagement. The first thing is the greenfield and creating new platforms. There's benefits in this from a greenfield point of view. Is insurers are not held back by legacy systems or technology that they have in place, and also they tend to take advantage of the new technology features that are out there in the market, which works always best all the time. But the downside on this first option is most businesses, like what I mentioned before, they're still on legacy systems. We understand insurance is an industry which takes a long time to migrate into new systems. I don't know what could be the reason, but it's very common in most insurance companies across Africa. And the other thing is, there's a need to have some structure or strategy in place when it comes to technology, because this will enable change. And as we all know, change is the key. The customer is evolved. The customer that you used to use method to sell in 1980 is not the same customer today. So there's also this concept or belief that what worked before will always work. It's no longer the case nowadays. And if legacy technology is going to break, then doing the greenfield approach is something that I would recommend needs to happen. So there's a need to have capital to invest into latest technologies, and as we know, it's a big challenge in Africa, and most businesses, if they don't conform to that, they are likely to face so many challenges. And the second thing is the legacy or the heritage that we build out of from that. And this comprises of things that I mentioned before, like not having capital and not having the capability of producing new products into the market, and there's an increment investing in short-term products which is not relevant to the market, and this brings about also lower risk into the environment that insurers are going into. So at the end of the day, there isn't much API overlay, like what I mentioned before, which needs to be considered for, because when you plug into legacy systems, the talking of a new environment to the legacy systems, it's something which is very costly, something which most insurance companies from a technology point of view don't understand.
Underpinning the importance of the customer experience to all insurance stakeholders was the central role that data plays in enhancing all operations. In our How Insurance Execs Are Leveraging Their Data Today webinar, we released new research conducted in partnership with Celent that revealed what challenges carriers face in harnessing their data, how they are driving value, and what they plan for the future. We started by asking the assembled carrier execs about their biggest data challenges. This aligned with the Celent research, which showed that organizational issues and multiple systems were the biggest challenges. Mike Ali, president of UCT, and Marty Ellingsworth, who wrote the Celent report, explained.
Culture certainly is a challenge as we think about a true data-driven organization. Insurance companies traditionally really have been in this mode of making better decisions based on data, but the opposite of that is the culture is historically steeped in intuition, expertise, experience, gut feel, if you want to call it that, and those things were what drove actual decision making in insurance organizations. So the shift that we see, the paradigm move, the culture shift, is how do we move from that set of kind of the good old boy decision making to shifting to making better decisions from good solid data and hard facts that's gathered from the organization.
When you look at the report that's going to come out under the Equisoft brand from Celent that about the research, there's a panel there of notable quotes that come from different people we interviewed, and one of the ones that kind of stuck out at me when it comes to trust is an executive at a company that multi-billion-dollar company, and they go, we're running a multi-billion-dollar company on a rat's nest of spreadsheets, and when we did a deep dive to look at the trust issues and look at the data issues and the timing issues, one of the things we found is the multiple spreadsheets coming from multiple systems, with all sorts of embedded macros and equations, ended up there was an error in it, and nobody had tracked it before. So when we started to, worry about, this executive is saying that they see this truth, and another executive sees a different truth. Digging down into the facts and looking at what happened to the data between one spot and another, that idea of provenance at source to what happened at one period of time to another, and what did the data change as not necessarily an audit trail, but I think an audit trail is not a bad idea. You could see that something happened where a macro failed or a call to another sheet failed, and a default was responded, and it was I think it was $50 or $70 million error that was like, oh, now we can fix that, and everybody was happy. But if that number went the other way, and there was $50 million that you owed instead of that you found, that would be a different level of excitement. So there's still a lot of issues around trust, because it's not just the data; it's what do you do with the data, what actions do you take based on that apparent truth, and how can we make this more consistent? So collecting data, getting it normalized. Maybe not getting to one source of truth because of all the time and retroactivity and delays that might happen in the real world of data flows, but at least one source of facts and a set of interpretations that are, this data at this time can be used for this purpose. It may change, it may not. If we're trying to do pricing, I think really understanding, from a longevity standpoint,
how do you make these data give you useful analytic answers? And then to refine them over time, because if you build a model and you validate it as the data mature, you'll find that there's this thing that I like to refer to called what do we have now, what do we have that's new, and what do we have that's next? And that progression of I've got better data on the way from either better systems or better third parties or better processes or better customers or better agents in terms of how they all interact with their employees. This idea that you're going to have to keep evolving as you keep learning, and that's like the future-proofing part of this.
There may be challenges associated with leveraging data, but companies are investing in data-related projects in all areas, as this set of results shows. There are some fundamental technology issues that are preventing many insurers from realizing the full potential of their data. As Equisoft Senior Director, Core Insurance Solutions, Brian Carey explained.
The challenges are still there, and they're still apparent in a lot of different ways, but the biggest challenges that we're seeing are carriers still have large sets of data still lying in legacy systems that are locked in there. And oftentimes these data platforms are in different data formats that you can't get out, or it may not even be capturing the data at the right granularity to be able to reconcile the particular metrics that you want to capture. And then additionally, what Marty alluded to here is the tooling in a lot of ways, and the software has not been standardized. So you end up with vendor stew, and you have a lot of different applications internally, all looking and capturing the same thing, and different pilot projects or POCs that may have happened, and really no advancements beyond that. So it kind of just ends up laying in spreadsheets and not really being captured or tracked in the proper ways. And now we have additional things being thrown our way around data privacy or GDPR or California Privacy Act, or even in financial reporting with IFRS 17, it presents significant data challenges to not only capture the data, but be able to pull it and even delete it when you need to as well. But so these are also additional things that are being introduced into the industry, and it's making it really a challenge to achieve with legacy platforms. And also, because of these regulations, it may even make companies err on the side of being more conservative with their use of the data. So not taking as many liberties as they may want to.
When it comes to the intersection of data and customer engagement, insurance faces some unique challenges that surfaced in this discussion between Equisoft's Chief Product Officer, Olivier Lafontaine, and Ete Novarica's Executive Vice President of Research and Consulting, Rob McIsaac.
So Olivier, one of the things that I think is really interesting is that in a lot of the dialogue we have with carriers now, there is a reframing of some of the conversations around how you get to what you're going to invest in and what a really good experience is. My comment about banks versus insurance companies is an interesting one, because in the insurance world, historically, companies have thought about doing things from the inside out. And it contrasts pretty markedly with what you see in banking or retail, for that matter, where it's much more of an outside looking in experience. Banks are voracious consumers of secret shopper data, of focus group data. They look at their customers, they look at competitor customers, and it really helps them to refine those experiences. That's one of the challenges that insurance companies historically had, was they didn't really do that. So they looked from that inside out, came up with what they thought were the best solutions, and then rolled them. And part of the challenge we see right now is that one size fits all was a model that might have been appropriate at one point. Today, the challenge may be one size could fit none, and it requires a lot more analytic work and a lot more understanding of how some of those digital properties will work.
Agreed. And I think one of the challenges that the life insurance industry faces in particular is that the carriers have been sort of isolated a little bit from the market in a lot of instances because of independent marketing or independent distribution channels. And so it's been a very convenient way to do business over the years, but that also has created an environment where the brokers have that relationship, they understand the needs, but the carriers are a little bit isolated from that because brokers want to preserve the relationship with the customers. So now we need to catch up on this, and everybody is going to have to open to that conversation to recover.
So how are carriers overcoming those data challenges? It depends on where they are in their digital transformation journey. The fact that so many companies are maintaining a long-term focus is great news for our industry and speaks to the vision and thought leadership of our executives. So, what are insurers doing next? Throughout the Accelerate webinar season, we heard a lot from attendees and speakers about carrier priorities for the coming year. Tokozile Malangu, Chief Executive Officer for the Insurance Institute of South Africa, made this wonderful statement about the way forward.
So we cannot do business the way we have been doing business in the past 5, 10, 15, 20 years. A lot has changed. The customer demands have changed. How we're doing business cannot carry on in that same manner or in that same approach. We need to move with the times. And the key thing, the word I always use is we need to remain relevant to our customers, relevant to all stakeholders. And we need to be able to remain engaged at all times in a manner that is meaningful to the customers.
That was supported about what leaders told us about their focus over the next few years. Clearly, customer experience enhancements are a top priority for insurers in the coming years. And when we talk about customer experience, we always need to be mindful that it includes both consumer and advisor needs, as highlighted by Nadine Godric, General Manager, Transformation at Clearview.
So some recent data actually that I've just seen this week is that already over the last couple of years, we've lost about 5,000 of our financial advisors out of the industry, and looking to go from maybe 25,000 down to 15,000 by the end of 2025. So I think COVID has had an impact here. It's really changed the way of working. It's impacted the way that advisors business, the way the practices work, and really the way advisors and clients interact with each other. So it's been a really, really tough year for our advisors with everything that's going on there. And I think from our perspective, you know, part of what we're trying to do is how can we support, how can we help our advisors, how can we create some efficiencies to help them with their practices, and how can we help bring some sort of digital capability and really help them out day to day. And that's key to our transformation strategy right now. The second one for us is all about customer. I can't emphasize that enough. I mean, it's real. The customer's obviously at the forefront of everything we do, the decisions we make as a business. And I think in a year like the one we've had, it's really been about customer retention and trying to assist the customers that we have rather than going after new business. So we still need to build trust. There's still work to be done after the Royal Commission that Bartosz mentioned earlier. We need to deepen relationships through better engagement to increase retention, and also, you know, just give them better tools and a better user experience, which we know that they're asking for. So a challenge we have with our current technology is we don't provide a good solution for customers to manage their insurance needs easily, and we don't really deliver a personalised solution to show our insights, which again comes back to that issue that Bartosz, you mentioned around data. You know, how do we utilise it? How do we leverage it? How do we actually get great insights out of that data to get closer to the customer? So there's a lot of work for us to be done in that space, but it's certainly one of our key priorities at the moment. And the third one is what's come up in the poll. It's the growth, it's the new business opportunities. And I don't have the answers, but I know that out of a lot of change, there are opportunities. There always is. We just need to find them. And I think for a company the size of, Clearview. We're a smaller size player in the market. Our market is dominated by big players at the moment, and we don't have a lot of legacy systems and legacy issues. So our challenge right now is how do we utilize the strengths that we have and gain a bigger share of the market and leverage off our new system capabilities and build a larger and a stronger business.
Raj Ramani, partner, America's customer and growth leader at EY, built on that by pointing out some of the very specific and actionable customer experience issues that the industry has to address going forward.
We're not lacking technology. We're not lacking data. It's all out there. It's a question of how do we use it? How do companies use it? Like how can you benefit? So if you look at the application process and you kind of break it into a couple of categories, we talked about the first one, right? And hyper-personalization is a term that you're going to hear more and more, and it's different than personalization. Personalization was static information that you had on a person, and you understood their profile, and you made decisions and judgments based off that. Hyper-personalization starts to get into really understanding real time with data and insights and AI. What are the things that you need to know about that customer, and how do you help them through that application process? Their early onset of getting through that process is going to be absolutely critical. Now, once they're in that process, you look at it, and it's debatable on how long an application takes, but let's just say it's anywhere between 3 to 8 weeks of process to get an actual end-to-end complete. What does that process experience look like? Right? You start to look at, the information that they have. How much information did they have to provide? How much information did they have to repeat? How much information did you pull from third party, from your own internal, to actually populate some of this and make it easier for them along the way? So you start to look at that component of it. It's going to be essential that they have a seamless and really interaction, whether it's the advisor, the agent, the end customer, whoever that is, really needs to have a real experience through that. And the final thing I'd say about the application process is really the tracking, right? It can get frustrating to say, where are we with this thing? And what typically customers start to do is they call the call centers, they call whoever and say, where are we with this stuff? I don't understand. And the expectation is set. No matter what other industry you look at, you can look at Amazon and there you can go look at tracking, where your packages are. You can look at Domino's and figure out where the pizza is in the chain of the pizza tracker. But our industry, it's a mystery, right? Like, where is it in the process? And it's very difficult for our customers to understand that. And it gets very challenging. And the most frustrating thing in that application process that, I think is low-hanging fruit, but we still do it, is we wait for the fifth screen to ask them the knockout question. Like, why is that not on the first question that comes on there and say, you know what, you're in this industry or this sector or this, we can't do this, but here's what we can give you. That's not there. We wait through the whole process, and typically what happens after that, after they get knocked out, is they're done, right? They're off, and they're either going to go use someone else, but from everything I talked about earlier on empathy and trust, you've already broken it, right? So you start to look at it and say, they're going to be looking elsewhere.
The question is, what's the best way to leverage the right technologies to enhance the customer experience without them becoming a burden? Equisoft's Ruben Virasamy, Senior Vice President for the Caribbean, shared his insights.
Yeah, so definitely. So technology can be a burden, right? But I think with the approaches that now that IT companies are taking, and we see it more true in the last 5 years, there are different models out there where customers, clients are able to rely on tools where the impact on the business is less than it was in the past, right? A concrete example, right? We see more and more now vendors offering managed solutions, right? Where you have front-end tools, back-office solutions, the infrastructure in place, and with the data migration and the support that's given. So through a package, what we call the managed option, right? So that's one way to go about it, right? Insurance companies are in the business of selling insurance and improving customer satisfaction and issuing policies and so on and so on. So getting access to a model where you have a package option where everything is included, from the front end tools to the back office solution with the hosting and the support and so on. So that's important, right? So that definitely addresses that burden, and also put a bit less pressure on the business team and the company's team to be able to work on that and focus on what's important, selling, right? So that's one of the things we said as well. And we talk about defining how that potentially that roadmap will look like, and addressing the pain points one by one, and then readjusting that roadmap as we move along. So that's important as well. So not having a roadmap for 5 years that's fixed, adapt to the market also. But that's where picking the right tool, the right solution that's flexible enough to allow you to adjust that roadmap as you move along, not to be stuck in an approach with technology. So technology should not be a showstopper when it's time to launch new business, when it's time to issue policies faster or change approach when it comes to selling, right? So you should really make sure that the technology you're picking, the solution you're picking, the vendor you're picking allows for that flexibility for future needs.
When it comes to future plans for using data to drive value, insurance leaders told us the following. Equisoft's Brian Carey explained a process for ensuring quick data wins.
So yes, the evolution has been slow here in this space, and the first wins around pricing, proper modeling of claims, as I had mentioned before, making your products profitable, not starting with zero every time. Bigger wins come from your customer experience that come out of this. So starting with something, POCing it, and really making sure that you could put something in play and take action upon it within the current constraints of your business operations. So it's really getting comfortable with the idea of becoming a data-driven culture and having joint cycles of improvement off of that, and really trying to get alignment from some of your laggards within your organization who may be not believing or buying into the strategy. It's showing the results, putting them in play within your bounds there. So, and also, data is only useful as the effort that you're willing to put into it. And it's around cleansing the data. It's around operationalizing, making sure you can pivot the data and also roll it up to whatever granularity that you need as well. So there's quite a bit of effort involved with that as well. So all these pieces are important, but they're certainly important here. So you need to plan for the evolution of the use of your data. As Mike said, don't boil the ocean here. Build the proper foundation, start small, POC it, and iterate, and get quick wins, and really try to get alignment on becoming a more data-driven company. Keep your purpose in sight. It's difficult in tech sometimes when you have a hammer, everything looks like a nail, but understand what the business objectives are and figure out how data can solve your problems there, and also try to understand what could be beneficial. So then as a result of that, aligning your business objectives to your tech investments, and avoiding that vendor stew, trying to simplify your ecosystem, get things into the cloud definitely helps simplify everything in terms of resource provisioning, security, deployments, infrastructure. Takes a lot of difficult things off the table that we used to have to deal with. And there's a lot of additional benefits. These cloud platforms have BI and analytics capability built into them. And so these aren't incredibly expensive at the volumes that we deal with within this industry. So the costs aren't too bad. And I know future-proofing, that's kind of like the holy grail of everything, but it's understanding that you're asking different questions of this data. You're turning a crank and the answer will come out the bottom with data science. And you don't always know where it's going to lead you. You need to trust the data and be willing to adapt and change.
Mike Ali provides some insight into how to approach your roadmap for leveraging your data as part of your digital transformation.
I think when we think about this roadmap process, where does it start? If you wanted to have it, how do you validate it if you've got one in place? But some real practical approaches to data is important to insurers. So you got to start with a strong foundation, make sure that you have access to that right data, stay rooted in your business strategy, and that will drive the needs and the investment around the kinds of information you need, what kinds of data do you need, and the tech that you need. And one reminder here is don't leave your advisors or agents or customers out of the process. It's awful easy to take an internal view of the data needs and not think about advisors, agents, and customers. So be sure that those personas are involved in this process. Their considerations are involved in the strategy process. So a lot of times what I would call it is a SWOT analysis, the strengths, weaknesses, opportunities, and threats. Make sure you have access to that data. Some of it may be stuck or siloed in aging legacy tech that makes access and updating that data over time very challenging, but you got to do that foundational work. Step 2, make sure your data is clean, reliable, and trusted. This isn't a one-time event, it's a process. You have to put some data governance in place that's needed to establish appropriate care of that data, not just at one point in time, but over time. And then leverage solutions to convert data into usable information with these modern tools, BI, AI, predictive analytics. Leverage these solutions that are becoming standards in the market. Trust the results by begin moving towards this data approach that's central to your decision-making process. So start small if you've not started very much. Make sure that the tech is delivering what you need so that if you fail with a decision, it's easy to recover. And then step 5, find out what doesn't work, recover from that, go back to step 1 and repeat as needed based on your business needs. This iterative data cycle is really what we believe the roadmap for success is.
Thomas Kirchick, Chief Digital and Transformation Officer at AXA Singapore, explains his views on what the innovation roadmap for the next 2 to 3 years will look like.
Insurance is in a tricky spot because it's stuck in the middle. It's squeezed on the margins one side. On the other side, parts of the customer relationship is being outsourced or eaten out by the different players in the ecosystem. So this is definitely a bit of a challenge, and the biggest challenge that insurance needs to face and solve and answer is how can I keep delivering value and creating value. And many insurers in this space trying to move out of being just an indemnity provider, basically just pay for claims and deliver more value. And I think what we are seeing quite across the board in different geographies and as well across the new players coming in is vertical integration, especially going upstream to become a provider of healthcare and wellness services, because this is on one hand where the insurance can innovate, deliver more value before the claim occurs, help to protect, not only indemnify, but as well as increases the number of touch point and frequency of interactions with the customers. And this is something, to be honest, that my company is doing across the different geographies. But if you look into Kartik's backyard, this is what Amazon is doing, rolling out for the workforce of 1 million people. They rolling out employee benefits program, but as well as the clinics, healthcare providers. And I think this will be the most interesting frontier for innovation and shift that is happening across the industry. Of course, it will not be the same everywhere because a lot of this will be dictated by the regulatory requirements in a specific markets.
To be able to work on that and focus on what's important, selling, right? So that's one of the things we said as well. And we talk about defining how that potentially that roadmap will look like and addressing the pain points one by one. and then readjusting that roadmap as we move along. So that's important as well. So not having a roadmap for 5 years that's fixed, adapt to the market also. But that's where picking the right tool, the right solution that's flexible enough to allow you to adjust that roadmap as you move along, not to be stuck in an approach with technology. So technology should not be a showstopper when it's time to launch new business, when it's time to issue policies faster or change approach when it comes to selling, right? So you should really make sure that the technology you're picking, the solution you're picking, the vendor you're picking allows for that flexibility for future needs.
When it comes to future plans for using data to drive value, insurance leaders told us the following. Equisoft's Brian Carey explained a process for ensuring quick data wins.
So yes, the evolution has been slow here in this space, and the first wins around pricing, proper modeling of claims, as I had mentioned before, making your products profitable, not starting with zero every time. Bigger wins come from your customer experience that come out of this. So starting with something, POCing it, and really making sure that you could put something in play and take action upon it within the current constraints of your business operations. So it's really getting comfortable with the idea of becoming a data-driven culture and having joint cycles of improvement off of that, and really trying to get alignment from some of your laggards within your organization who may be not believing or buying into the strategy. It's showing the results, putting them in play within your bounds there. So, and also, data is only useful as the effort that you're willing to put into it. And it's around cleansing the data. It's around operationalizing, making sure you can pivot the data and also roll it up to whatever granularity that you need as well. So there's quite a bit of effort involved with that as well. So all these pieces are important, but they're certainly important here. So you need to plan for the evolution of the use of your data. As Mike said, don't boil the ocean here. Build the proper foundation, start small, POC it, and iterate, and get quick wins, and really try to get alignment on becoming a more data-driven company. Keep your purpose in sight. It's difficult in tech sometimes when you have a hammer, everything looks like a nail, but understand what the business objectives are and figure out how data can solve your problems there, and also try to understand what could be beneficial. So then as a result of that, aligning your business objectives to your tech investments, and avoiding that vendor stew, trying to simplify your ecosystem, get things into the cloud definitely helps simplify everything in terms of resource provisioning, security, deployments, infrastructure. Takes a lot of difficult things off the table that we used to have to deal with. And there's a lot of additional benefits. These cloud platforms have BI and analytics capability built into them. And so these aren't incredibly expensive at the volumes that we deal with within this industry. So the costs aren't too bad. And I know future-proofing, that's kind of like the holy grail of everything, but it's understanding that you're asking different questions of this data. You're turning a crank and the answer will come out the bottom with data science. And you don't always know where it's going to lead you. You need to trust the data and be willing to adapt and change.
Mike Ali provides some insight into how to approach your roadmap for leveraging your data as part of your digital transformation.
I think when we think about this roadmap process, where does it start? If you wanted to have it, how do you validate it if you've got one in place? But some real practical approaches to data is important to insurers. So you got to start with a strong foundation, make sure that you have access to that right data, stay rooted in your business strategy, and that will drive the needs and the investment around the kinds of information you need, what kinds of data do you need, and the tech that you need. And one reminder here is don't leave your advisors or agents or customers out of the process. It's awful easy to take an internal view of the data needs and not think about advisors, agents, and customers. So be sure that those personas are involved in this process. Their considerations are involved in the strategy process. So a lot of times what I would call it is a SWOT analysis, the strengths, weaknesses, opportunities, and threats. Make sure you have access to that data. Some of it may be stuck or siloed in aging legacy tech that makes access and updating that data over time very challenging, but you got to do that foundational work. Step 2, make sure your data is clean, reliable, and trusted. This isn't a one-time event, it's a process. You have to put some data governance in place that's needed to establish appropriate care of that data, not just at one point in time, but over time. And then leverage solutions to convert data into usable information with these modern tools, BI, AI, predictive analytics. Leverage these solutions that are becoming standards in the market. Trust the results by begin moving towards this data approach that's central to your decision-making process. So start small if you've not started very much. Make sure that the tech is delivering what you need so that if you fail with a decision, it's easy to recover. And then step 5, find out what doesn't work, recover from that, go back to step 1 and repeat as needed based on your business needs. This iterative data cycle is really what we believe the roadmap for success is.
Thomas Kirchick, Chief Digital and Transformation Officer at AXA Singapore, explains his views on what the innovation roadmap for the next 2 to 3 years will look like.
Insurance is in a tricky spot because it's stuck in the middle. It's squeezed on the margins one side. On the other side, parts of the customer relationship is being outsourced or eaten out by the different players in the ecosystem. So this is definitely a bit of a challenge, and the biggest challenge that insurance needs to face and solve and answer is how can I keep delivering value and creating value. And many insurers in this space trying to move out of being just an indemnity provider, basically just pay for claims and deliver more value. And I think what we are seeing quite across the board in different geographies and as well across the new players coming in is vertical integration, especially going upstream to become a provider of healthcare and wellness services, because this is on one hand where the insurance can innovate, deliver more value before the claim occurs, help to protect, not only indemnify, but as well as increases the number of touch point and frequency of interactions with the customers. And this is something, to be honest, that my company is doing across the different geographies. But if you look into Kartik's backyard, this is what Amazon is doing, rolling out for the workforce of 1 million people. They rolling out employee benefits program, but as well as the clinics, healthcare providers. And I think this will be the most interesting frontier for innovation and shift that is happening across the industry. Of course, it will not be the same everywhere because a lot of this will be dictated by the regulatory requirements in a specific market and the structure, but definitely it's one of the priorities. Second one is, as we have been, many of you mentioned before, there's a pressure in terms of the profitability and push to move towards the automation. Because from 2 reasons. One is the profitability and optimizing the operations, and the second is naturally this will be driven by the cost. And the second is going away from the model that was very prevalent in the industry, which is outsourcing the manual processes and BPOs. Because especially in the face of the disruption like COVID, we have seen that actually it's not only about costs, not about customer service, but this is a risk, operational risk. When suddenly a big chunk of your operation is shut down because in a country that you actually not operate, there's what is happening, there's an outbreak of the pandemic, and you cannot do anything yourself actually, but you rely on a partner to provide support and drive your operations. This is becoming a serious risk that impacts from a regulatory perspective, it impacts your customers and distributors. So definitely we're going to see here a lot of focus in this aspect, how to insource, both in terms of skill, but as well as drive the automation and achieve better customer and distributor experience in the effects. And from the perspective of purely distributor, what we're going to see in terms of innovation is really the phygital model that we have been practicing.
Because today I've taken a policy 10 years happening, transfer happening today, and also going forward, right? So really
drive the automation and achieve better customer and distributor experience in the effects. And from the perspective of purely distributor, what we're going to see in terms of innovation is really the phygital model that we have been practicing, taking foothold, and really everyone being comfortable switching between the channels. Because so far, what we have seen so far, it's mostly generating the lead or acquiring the customers, but always closing them offline. But now we're going to see really the switching, something that we've been talking for a long time, switching between channels. So it won't be only about lead acquisition, but as well be closing and support in much more frequent and more complementary way.
Alex Kimura, partner, Singapore at McKinsey & Company, pointed out opportunities that are emerging in Asia that could influence insurance activity around the world in the coming years.
I see sort of three specific areas where I think there's a lot of potential emerging for insurance companies. So one is really around wealth transfer. Never in Asia's history have we seen so much wealth transfer happening today, and also going forward, right? So really the emerging affluent populations of Asia are now heading into retirement, and there's a lot of wealth transfer taking place. So that's really a sea of opportunity for a lot of insurance companies. Second is aging population. I think we already know that already. Even countries like Japan, Korea, Taiwan, even China, right? China has the largest aging population just by sheer size, is going through a lot of change, and a lot of propositions need to be and will be developed for that aging population. Someone told me a statistic the other day that someone that's born today will live to 160, right? So the whole notion of life stages will change as we go forward, right? For somebody that's going to be 160. And last but not least, something that I would say is quite Asia specific is the sandwich generation, where you have multi-generation living under one roof or in the same neighborhood. How do you think about insurance in a sandwich generation environment? Do you do underwriting for the whole family? Do you have a group policy for the family? How do you think about that to develop, a holistic experience, right? So these are some of the things that I see sort of innovation happening and Asia being at the forefront, but that can only take place, as I mentioned before. It's not just about products, but it's really about developing propositions and really understanding the customer through deep insight, right?
Rana Biswas, Equisoft Vice President, Wealth and Insurance APAC, had some interesting takeaways to summarize what the near-term future may hold for insurers.
I think the future looks very bright. And I think we all recognize that a lot of work has happened, specifically on the innovation front across the world and specifically in APAC. And we've seen really, really brilliant, smart models evolving. And on the technology front, I'm amazed by what some very small startups have done. Amazing stuff. But I think what's important and critical is you start small. You just don't want to rip apart your entire value chain and say, I'm going to go digital and do everything together. That's not possible. So evaluate your process, because most of the insurers, be it life, be it non-life, be it across the line of business, they've been there for the last 25, 30 years, if not more.
So evaluate your process for innovation and test, and then probably change some model, and then it's test and learn, TNL, what we call. And also, can you adapt quickly? Can you kind of fast forward that and take those learning and then move forward? I think that's one. That's the first takeaway. Second, as Karthik also pointed out, I think it's the plethora of data. And to my mind, very simple. Am I, as an insurer, engaging with the customers, especially life insurance? Because okay, you're renewing a policy every year. Am I engaging with the customer? It's just 11 months and then you renew it. What the propensity? So the data analytics gives you a great canvas and an insight that what is the propensity of this person to buy another policy or upsell, cross-sell. What has this milestone changed? Because today I've taken a policy 10 years back. My milestones have changed. My entire, shall I say, the needs analysis that was done 10 years back, it's not the same. So has the advisor come back to me, or has the insurer kind of reached me saying that, can we have a small, 15-minute chat? So, and given my experience, what is my propensity? Which product will I take up? So the upsell and cross-sell comes, and these are also revenue drivers of the insurance company, given the pressure margins, that we've seen. Third, I think, and this is my favorite in terms of the customer and the stakeholders. So there are three stakeholders: the customer, which is your external customer, the consumers. Second, the customers, internal customers, which are your distributors, your bank insurance partners, your advisors, tied agency. And the third is your internal operations, customer service. So you need to kind of build that ecosystem where everybody comes together, and it's absolutely customer centric. So are we talking to the customer? So are our processes and everything focused and built around the customer, rather than we build something and then after 2 years, 3 years, you align it to the customer, because there's a lot of customer complaints. I think that mindset, we've seen a lot of traction there across the insurers, specifically in APAC. And really, this has gone a long way, not only for Gen Z, but also for existing customers who are kind of happy now that, okay, people are asking questions, people are engaging with me. The advisors, the insurance companies are engaged with me.
Thank you for attending today's webinar. I hope you enjoyed the results we shared from previous events, along with hearing from all of our speakers. I think the key takeaways clearly showed that customers have a heightened expectation in how they deal with their life insurer, and it won't change anytime soon. However, customers continue to show that they can adapt to new technologies and self-service capabilities. It's critical for insurers to master their customers' journey and align their business model with clients' shifting expectations. Utilizing the best integrated technologies from modern core systems to sales and service solutions are critical to building processes that create superior client engagement, whether the interactions are digital or in person. And those companies that can harness the power of their data to create hyper-personalized products and experiences will gain a significant advantage. So there we go. Before we go to the Q&A portion of our webinar, I'd like to remind you that you can enter your questions in the chat window located on the right-hand side of your screen. If you're interested in seeing the full webcast for any of the featured segments today, you can watch them on demand at equisoft.com/accelerate. And you can sign up at the same time to become an Equisoft insider, so you'll be the first to know when we launch our new webinars of 2022. Now with that, we're going to try to cover some questions, although we're running out of time. First question I have: what technologies are most valuable in helping insurers accelerate growth? Well, companies I've seen are pushing ahead with digital sales and service solutions. So everything from self-service agent and customer portals to e-applications and quoting and illustration tools are increasingly in demand. And you also can't forget about the advisors. Your growth depends on their ability to increase productivity, properly analyze client needs, and also give convincing presentations. So definitely ensuring that they have a good CRM and planning tools specifically designed for them is a critical component to jumpstarting and sustaining growth. Second question, when the market and the industry are changing so quickly, where do we prioritize your tech investment? Well, invest in those things that give you a foundation for future growth. Prioritizing tech spending to give you the ability and the agility to quickly innovate and change is critical. So any regulatory changes, new products from competitors, or shifts in consumer needs has to be adapted to quickly. Also, if you haven't already, a policy administration system modernization is a great foundational upgrade. It provides, of course, a base for optimizing your policy admin, but also it accelerates product changes and new product development. It also gives you better access to your data and allows you to connect to digital sales and service solutions through APIs, so added flexibility. That being said, looking at the time, I think that's all the time that we do have for questions today. For those questions we didn't get to, we'll get back to you via email after the presentation. If you'd like to continue the conversation and see how we can help, feel free to contact me directly or come visit us at equisoft.com. Thanks again for joining us, and have a great day.